The letter is 1 page. It uses the word experimental twice and the words not medically necessary once. You read it 3 times because the first 2 times your brain won't process the sentence in the order it's written. The date on the letterhead is Tuesday. Your son's name is Marcus. He is 7 years old. His liver is failing. 8 months ago, the biggest medical decision you'd made for Marcus was whether to do the cavity filling at the pediatric dentist on Elm Street or wait until his next scheduled cleaning. That was the scale of your medical life. A cavity. A scheduling question. You're 34. You work in accounts payable at a mid-sized logistics company. You've been there 9 years, which means you have the good insurance. Not the entry-level plan. The PPO, the one with the lower deductible and the broader network. The one your HR rep walked you through when Marcus was born. And you upgraded specifically because you thought, this covers everything. You pay $487 a month for it. You have paid $487 a month for it for 7 years, and in 7 years you had used it for wellness visits, 1 broken finger, 2 rounds of antibiotics, and a set of corrective lenses. You had a plan for Marcus. Not a formal plan, the kind parents carry without writing down. A 2nd grade play, a soccer league in the spring, a road trip to see the Grand Canyon before he got too old to think it was cool. You had a husband named Daniel, who coached the soccer team and drove the carpool and grilled on Sundays with the same playlist he'd had since 2017. You had a house with a backyard that needed the lawn mowed every 2 weeks, and a dog named Biscuit who refused to use the dog door you installed and scratched at the handle instead every single time. You had a life that was ordinary in every direction, and you knew it was ordinary, and you were grateful for it in the specific way you can only be grateful for something you think is permanent. In October, Marcus started getting tired. Not child tired, wrong tired. The kind where he fell asleep at the dinner table on a Tuesday at 6 p.m., and you touched his forehead and he didn't wake up. His pediatrician ran blood work on a Thursday. By Friday afternoon, she had referred you to a specialist. By the following Monday, you were in a hepatologist's office looking at numbers on a printout that you didn't have the vocabulary to interpret, but that the doctor interpreted in a voice that was careful and quiet in the way doctors' voices are when the news is not preliminary. Progressive liver disease. Genetic. Not something you caused, not something Marcus caused, not something anyone in your family history had flagged or predicted. A cell somewhere in his body had been built incorrectly, and it had been quietly failing his liver since before he learned to read. The treatment path, the doctor told you, was a liver transplant. Not maybe, not eventually, within the year. You had the insurance. You had the plan. You had done everything right. You didn't know yet that none of it was going to work the way you thought. The prior authorization request was submitted by Marcus's hepatologist on November 3rd. The case number was PRE 7741M. You wrote it on a Post-it note and put it on the refrigerator. You'll come back to that number. Prior authorization is how your insurer confirms, before treatment begins, that they will cover it. You did not know this process existed before November. Most people don't, until they need it. The process runs through a department called utilization management. You did not know that department existed either. The hepatologist's office told you the standard turnaround was 7 to 14 business days. You did the math on the calendar. November 3rd plus 14 business days, accounting for Thanksgiving, put you at November 22nd. You waited. On November 24th, 2 days past the deadline, you called the member services line on the back of your insurance card. The hold time was 47 minutes. When a representative picked up, she told you the case was under review and that she could not provide a status update beyond that. You called the next day, 31-minute hold, different representative. Same answer, under review, no timeline available. On December 1st, a letter arrived. Not a phone call, a letter. 1 page. The request had been reviewed and denied on the grounds that the proposed transplant was not medically necessary at this time, and that the procedure met the insurer's criteria for experimental treatment under policy provision 14.7c. You sat at the kitchen table and read it. Then you read it again. The words, not medically necessary, were about your son's liver, your son, who had fallen asleep at the dinner table in October, your son, whose doctor had used the phrase, within the year. You didn't know yet that a denial from utilization management was only the first door. You didn't know yet that the process you were about to enter had a name, a timeline, and a set of rules that had nothing to do with Marcus's medical condition and everything to do with how you filed the paperwork. The first appeal is called an internal appeal. You have 180 days from the denial to file it. Marcus's hepatologist submitted supporting documentation. 3 peer-reviewed studies, his complete blood work panel going back to October, and a letter from the Transplant Center at the University Hospital confirming Marcus's position on the evaluation waitlist. The appeal was submitted December 9th. Internal appeals are reviewed by the insurer's own medical directors. The turnaround is 30 days for non-urgent cases, 72 hours for urgent. You asked the hepatologist's office to file it as urgent. They did. The insurer reclassified it as non-urgent. No explanation provided. The 30-day clock started December 9th. You went back to work. There was nothing else to do. The case number on the refrigerator was PRE7741M. There was now a second number, APP7741M01. You wrote it underneath the first one. The denial came back on January 7th. The internal medical director, whose name was not provided, had reviewed the submission and upheld the original decision. The documentation did not meet the criteria for medical necessity under the insurer's current coverage guidelines for pediatric organ transplantation. The letter included a paragraph explaining your right to request an external review. External review means a third-party organization, independent of the insurer, looks at the case and makes a binding determination. You have 60 days to request it from the date of the internal appeal denial. The request goes to your state's insurance regulatory office, which assigns it to an independent review organization. The IRO has 45 days to complete the review. 45 days. Marcus was in the hospital for 4 days in January for what his doctor called a decompensation event. That is the clinical term for the point where the liver stops compensating for its own failure. His abdomen had swollen, he had fluid that needed to be drained. He was 7 years old, and he had a drainage tube, and he asked you if he could still go to his friend Tyler's birthday party on the 15th. You told him you'd figure it out. He went to the party. He sat in a chair the whole time. You filed the external review request on January 9th, 2 days after the second denial letter. The request was acknowledged by the state regulatory office on January 14th. It was assigned to an IRO on January 22nd. The IRO's 45-day review window opened January 22nd. You called the IRO on February 3rd for a status update. They told you they could not discuss the timeline or contents of an ongoing review. They told you the 45-day window was defined by state regulation and could not be shortened. February 3rd plus 45 days is March 19th. You looked at Marcus's progression chart from his hepatologist. The doctor had shown it to you in November. She had drawn a line on the graph with a pen. She had said, "We want to be ahead of this line, not behind it." You taped the progression chart to the inside of a folder. You put the folder next to the Post-it note on the refrigerator. The Post-it note now had 3 case numbers on it. Daniel sat across from you at the kitchen table that night and asked you to explain what 45 days meant in the context of the graph. You showed him the graph. He looked at it for a long time. Then he got up and went to stand at the kitchen sink and looked out the window at the backyard for about 10 minutes without saying anything. That was February 3rd. You didn't know yet what March 19th was going to cost. 3 weeks later, you're in the hospital cafeteria at 7 a.m. because Marcus had another decompensation event overnight, and you've been here since 11 p.m., and the floor nurses told you to eat something. The cafeteria is a long room with yellow fluorescent lights and a laminate floor and a rotating display of packaged muffins next to the register. You get a coffee and a muffin you don't eat, and you sit at a table near the window that looks out onto a parking garage, and you open your phone. There is an email from your employer's HR department. It arrived at 6:47 a.m. They are writing to inform you that your intermittent FMLA leave has been running since December, and you have used 9.4 weeks. You have 2.6 weeks remaining. After that, your position is not guaranteed. You have been doing this. The calls, the letters, the hospital overnights, the drives to the transplant evaluation, the forms, the follow-ups, since November. You have been doing it while working. You have been working because the insurance comes through your employer, and the insurance, despite everything, is the only card you have. $487 a month, $5,844 a year, 7 years of payments, $40,908 into a plan that has denied your son's transplant twice. You finish your coffee, you go back upstairs. The transplant coordinator at the university hospital called you that same afternoon. She told you Marcus's PELD score, the pediatric end-stage liver disease score that determines his position on the transplant wait list, had been updated. It had increased. Higher is worse. She explained this in the tone of someone delivering information that is simultaneously clinical and catastrophic, which is the only register available to someone who does this job. She also told you that the wait list is not the same as authorization. Even if a donor liver became available tomorrow, you would still need the insurer's authorization before the surgery could proceed. Without authorization, The hospital could not perform the transplant on an insured patient without exposing itself to a billing dispute that could cost them more than the procedure. You thought the first denial was the worst part? It wasn't. The worst part is finding out that the thing trying to save your son's life is also waiting for a letter. By month 4, the question wasn't whether the IRO would rule in your favor. The question was whether it would matter in time. Daniel had stopped coaching soccer in February. He had done it without making an announcement, the same way you stop doing a lot of things in the 4th month of a crisis. You just don't do them anymore, and no one mentions it. He'd taken on extra project work to cover the income gap from your FMLA leave. He worked from the kitchen table after Marcus went to sleep. He worked until midnight some nights. He did not complain about it. He did not have the energy to complain about it, and neither did you. And so the two of you moved through the same house in a parallel silence that was not anger and not distance, but the particular exhaustion of people who have been afraid for so long that fear has become the background noise of everything. Your friend Carrie had called in December and January with the specific frequency of someone trying to stay in contact without making you feel managed. By March, she had stopped calling as often, not because she didn't care, because she'd run out of things to say that weren't hollow. You understood it. You couldn't hold it against her. Hollow is the only thing available to people on the outside of something like this. You stopped answering when she called, not because you were angry, but because explaining where you were every time she asked took energy you needed for the next phone call with a case number attached to it. The IRO ruled on March 21st, 2 days past the 45-day window, which is within the allowable variance under state regulation. The determination was in your favor. The transplant was medically necessary. The insurer was required to authorize the procedure. The authorization arrived on March 26th, 5 months after the original prior authorization request, 143 days. You called Marcus's hepatologist. She was on rounds. Her assistant said she would call back. She called back at 4:47 p.m. Her voice had a different quality than usual. Still careful, still quiet, but with something underneath it. She said the authorization was good news. She said they would contact the transplant center immediately. She said they would move forward as quickly as they could. She did not say, "This should have happened in November." She is not allowed to say that. Her job is the medicine, not the timeline. Marcus's PELD score at the time of the IRO ruling was 24. The transplant coordinator told you the median wait time for a pediatric liver at his score in your region was between 30 and 90 days. You wrote that on the Post-it note, under 3 case numbers and a coverage ruling date. The Post-it note had been on the refrigerator for 143 days. Biscuit scratched at the dog door handle that evening. Marcus scored him from the couch. 8 out of 10. Good effort, bad technique. You laughed. It was the first time you had laughed in 6 weeks, and it felt so unfamiliar it almost hurt. Marcus received his transplant on April 14th, 53 days after the authorization. He was in surgery for 9 hours. He was in the pediatric ICU for 4 days. He was in the hospital for 3 weeks. The transplant worked. That is the truth, and you hold it the way you hold something that almost didn't happen. The total billed amount for the surgery, the PICU stay, the hospitalization, and the postoperative care was $612,000. After insurance, your out-of-pocket responsibility came to $11,400. That number hit your maximum annual out-of-pocket limit and stopped there. You put it on a payment plan, $380 a month for 30 months. Your FMLA leave ran out on April 9th, 5 days before the surgery. Your employer held your position through the surgery and the first week of Marcus's hospitalization as a courtesy extension. You returned to work on May 3rd. The accounts payable queue had 23 pending items flagged as overdue. The insurer's initial denial cost 143 days. What those 143 days cost in total, the PELD progression, the decompensation events, the FMLA leave, the payment plan, the nights in the cafeteria with a muffin you didn't eat, doesn't have a line item. There's no code for it in the explanation of benefits. There's no column on the coverage summary. Marcus went back to school in May. He gets tired sometimes, still. The doctors say that's expected. He doesn't go to soccer yet, maybe in the spring. On a Tuesday afternoon in June, you're in the kitchen. The Post-it note is still on the refrigerator. You haven't taken it down. 3 case numbers, a coverage ruling date, a range of 30 to 90 days in your own handwriting. Biscuit scratches at the dog door handle. Marcus scores him from the couch. 9 out of 10, he calls out. Better technique. The Post-it note stays on the refrigerator. Next week, POV. You're having a miscarriage in the ER. The bill is $34,000. Insurance calls it outpatient. If you want to be there when it drops, subscribe.